Hello, 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 everyone. How is everyone doing today? Choppy, bullish day. Very, very choppy in the financial futures, but still an up day. Still fulfilling the probabilities. How is everyone doing? Davey, welcome, welcome, welcome. Anissa, good evening. Again, condolences to everybody in the UK on the Queen's passing today. So, just wanted to get that out there. I know we have some people who watch from in the UK. Let's see. Let's get straight to it. Once Bob pops on, we'll get his thoughts on the ECB and anything from Powell's speech. Evans was out there too today, but we got Evans speaking tomorrow. Wholesale inventories, which is mine, or George Waller speaking. So you got three speakies tomorrow. So keep that in mind. Although, unless they really say something earth shattering, not expecting a ton of stuff, we can get some back and forth again. In back and forth choppy days, there are things that will trigger the reversals, but they won't really change the short term trajectory that much. So, again, pretty mixed. Mega caps were mixed. Banks were strong today. Oil stocks bounced back a bit. So that's really it. Fed Watch tool up to 86% for that 75 basis points, still in negative gamma territory. We said to watch that 4,000, and we had a lot of trouble sustaining moves above that 4,000 with the gamma. So that's pretty much where we sit. DocuSign, I didn't see the results, but there was a substantial gap up. Zscaler had a gap, and Restoration Hardware, I was looking for the results. They were slightly up, but we'll have to see. So don't have any news on those. The thing I'm paying attention to tomorrow morning is Kroger. All right. Coco, I already said there was a buy signal yesterday. What do you mean you told me to buy the dip? Coco, you're all over the place. I should just mute you. You're sounding like the Tom. You're the would you order the same delivery as Tom Tom? Docu ripping. What were the doc? You have docu earnings in there. Let me just get Bob on with this. Bob, let me bring you on. Oh, by the way, before I even bring Bob on, I'll bring Bob on if you subscribe. There we go. That should be the impetus to bring Bob on. And you're on.
I think the weather down here is causing like these goofy little whatever. The weather's not good here.
What do you mean the weather's not good? What is it?
It's just a lot of rain and it interrupts the signal. So like you are kind of in and out, sounding a little like R2D2.
There's rain in Florida?
Oh, that's weird this time of year, isn't it? Although we're still on a record for named storms in the Gulf, there have been none. There's a
So,
couple of false alarms or named storms in the larger body of water, but nothing has come into the Gulf yet. It's always been kind of died down before it gets here. Coco, you call this a win? Jesus, Coco. Things have gotten pathetic for you, buddy. Hey, options 22.
hello, options 22. Bob already beat me to the punch. Hey, Josh. All right. So, we had ECB first, 75 basis point hike. What's your takeaway, Bob?
So there were a couple of things. Number one, crap. Hold on a second. So my first take was I did not find Lagarde to be as convincing as Powell. I also did not find her to be as hawkish as Powell. Um, hang on a second. Couple of things. I'm sorry, I'm getting like what might be an emergency. Okay, it's not an emergency text. All right, so a couple of things that I took from the speech this morning, or I should say the press conference. There are three estimates for inflation through this year over 8%, through next year over 5%, then 2024 2.1%. Right? So 2.1%, that's the target. I mean, okay. So that's not really a success against inflation, in my opinion. Secondly, she said 75 basis points is not going to be the norm, although she did not rule it out for the next meeting. She did say that there was going to be a another rate hike. She did say it was likely there was another one, but she said 75 basis points is not going to be the norm. That was the most forceful thing she said in the way that she said it. No, this is not expected to be the norm. It's extraordinary circumstances. But she, of course, didn't rule out, said they're going to be data dependent. I think the idea that the ECB has been a little less hawkish on the data throughout, she tried to defend that position. She said people said that, we've been sort of behind the curve. She said it's our job to anticipate this stuff. We admit mistakes. Having said that, how would you model a pandemic? How would you model a war, an energy crisis? I mean, I get what she's saying, but she's basically like Coco, where she says, you know what, I didn't know it was going to happen, but now that it did happen, I guess I'll buy the dip. So very much like Coco, where nothing she says makes any sense at all, but she just kind of keeps trying to blame other people when it doesn't work and give herself credit when it does. And then the last one, their base case did not include a recession. Literally everyone thinks the EU is going into recession, including myself. Their base case had positive GDP for each of the next 3 years. She did say when she was questioned on that their worst case has a down 1.9% GDP next year. So what's up, Daniel? I guess there is some recession baked in to a certain degree. But that's in their worst case scenario, which I already think they're in their worst case scenario. Okay? So there you have it. That's what I think of the ECB meeting. I don't think it was as hawkish. Now, at the same time, Jerome Powell was speaking, right? He again was extremely forceful. And given that, I kind of wish I would have been on the feed this morning, but now I sound like Coco because I'm right. So I'm going to act like I'm always right, no matter what actually happened. This morning, after yesterday's 75 basis point by the Bank of Canada and today's 75 basis point by the ECB, how the hell does the Fed do 50 with a 3.6 or 3.7 unemployment rate? How do they do 50? They have to do 75.
They're sort of boxed in a corner now. They're like
they're completely boxed in.
All right, I will agree that if they only did 50, then I would agree with these people who say the pivot was a 50 because they're the dumbest thing out there then.
Yeah. So they would be the most dovish recent central bank meeting, which I guess is possible. But yeah, I think, you saw that yesterday. We ended up at what, 74 or 78% chance of 75 by the close. And then it popped up to 88 after the ECB, and then it settled in at about 86. But yields continue to rise. They fell at first, but then they continue to rise. So,
hey, Coco, recession is priced in. Tell that to the earnings estimates.
Tell that to Mike Wilson from Morgan Stanley, who's got a target of 3,400 in the S&P.
Well, you got a lot of recession is not priced into equities.
Not priced in. That's
not priced in. That is actually, if you look at where earnings still are projected, there is a slowdown somewhat priced in, but no recession priced in. That
makes me think Coco is under 24 years old.
Or he's been spiking his Kool-Aid.
He soaks pineapple in vodka. I don't know.
That is just absurd. I mean, yeah, certain things do get priced in, but a recession is not priced in, and you can verify that by looking at earning estimates. So,
and on the daily chart, these last 2 days up is a great sell theoretically. It still has to get through that sort of 3,900 again, but where it's going in the rotation zone with some of the significant levels up above, it's a really nice sell over the next couple of days if it triggers. Hasn't triggered for me yet, but
No. We would
Oh my
have
God.
on a close
Fed will
below
print in
today's
October. I'm sorry. The Fed will print in October. They're going to print.
Fed will pivot in October.
Oh, pivot. I said print. I thought it said print. Well, I guess a pivot would be printing.
If
Um,
they've actually said they said they're going to leave rates
yeah, that's not a pivot.
stable.
That's okay. He's literally, I'm surprised he could spell pivot with those kind of comments.
Because, all right, they've already been stressing, hey, once we pause, we're going to pause for a while. You
One of
didn't
the
even say
estimates, I believe it
pause.
was one of the estimates, and I think, I'm not sure if it was Bullard or what, but they said 2 years. Oh, I know who it was. It was Esther George. She said they'll probably pause rates for somewhere in the range of 2 years. If that's a pivot, I don't. So when your dad used to say, "I'm going to turn this car around," he meant he's just going to park.
See, I wish people would use the language consistently, and they're not going. They've stressed.
I've changed the meaning of everything.
They're gonna overdo it a bit. Not they're trying not to overdo it a lot, but they're not gonna do 75 and then say we're done. If they were going to be done after September, they'd probably just do a 50. Well, they probably, if they were going to slow it down, do a 50, 25, 25. They're not just going
Yeah.
to say, we're done.
Mike, I'm going to step away and mute this real quick, but I'm not leaving. I just have to make a 2-second phone call. I'll be right back.
All right.
If there's any questions for me, now's a good time to type them in.
Yes,
Be right
now
back.
is a good time. What I was going to say, well, Bob's pausing. If you want the rotation now sell signal, and people are asking about percent B sell signals, this would be it. It would be on a tomorrow close below today's low. Other than that, there is no substantial topping pattern. We still have room to run. Remember, CPI is next Tuesday. Tomorrow, besides your Fed speakies, there's not much going on. So don't get caught into this. And also don't get caught into, if you're trying to trade slightly longer term, don't get, I said, choppy, would not be surprised to see choppy. This is choppy and it is up. How do you get to choppy and up? Higher close, and it was a pretty decent range bar. Don't try to catch every little move on a 5-minute chart if you're playing for another rollover. You wait for either a topping pattern or a rollover signal. Yeah, that's what he believes. He said inflation can be tamed without pain of a Volcker error. That doesn't mean they're done. That doesn't mean, and they still think, even if they have a recession, they think it will be mild still. Whereas Volcker had to go, massive. But as I've said, they're not even to where they consider neutral yet. I think this next, for a couple of them, if they do 75 in September, they're going to get to what they consider neutral, and then they want to go a little beyond that. And they keep stressing. I've seen a number of them stress, and I can't remember because we got so many of them doing so many speeches. But anywhere from 3.5% to 4% is above neutral and in a tight realm, and then leave it somewhere in there. Well, if you're going to get 3.5%, you're still got to do one more rate hike, at least. So don't, you know what? Pay attention to stuff. Okay, so let me get down to the shorter term stuff. Shorter term, choppy. I put then on the harmonics also from today, so the people trying to follow along at home from the lows back on the 6th. Then when we got this nice little pullback off the open, you could go to this 39.96 pausing bar. It was already in vicinity. Remember, you're not trying to hit things to a T. We already had this 4,012 level, and that gave me 4,010. Spiking up there, pulling back, spiking up in this area again. If we continue in choppy or even in bullish mode tomorrow, 4,024, 4,031. Remember, we can go a little beyond that 4,000. That's going to be a pretty substantial anchor, though. So I'm watching that. So be like the Death Star. What's that thing they fire from the Death Star that held on to the ships? You know, the gravitational thing. That's what I'm more expecting around 4,000 unless something really snaps with some upside momentum. So that's how I got the levels. Also, I've shown this before. Let me show it again. Because, I try to teach things when I said, we got a percent B. I've talked about this. You have to do it on a close below the lowest low around the bar that triggered it, which was today's low. If you wanted a more aggressive stop, I've done tons of testing with stops. The next best stop, and this is a few percentage points less, is you'd have to use your retracement harmonics and use the 62.5 as a closing basis. So here's my harmonics. Okay, you see them here to here. And then you'd have to keep the stop below that, which would have been 39.23. We didn't get anywhere close. And then even if you ratcheted it up, too many people are crowding stops. And they're like, it stops too far away. Then reduce your position size. Do you want to put probabilities in your favor or not? This is where I get sort of tired of stuff. People want these really tight stops, but then capture the bigger moves. You're not going to get it both ways. And if you keep ratcheting it up, and then you get, eventually we'll get a nice little sell, or we'll get more aggressive going into tomorrow. But you see, even with this volatility, you're keeping your stop. You can't be putting it somewhere above this 50% level because you'll get taken out on spikes. Now, as we get more and more momentum and we start getting more cycle tops, yes.
Coco will get taken out because he's already long.
Huh?
Coco won't get taken out because he's already long.
He'll be. Even if you're managing a long position, you don't want to get taken out. Look, we had a aggressive buy yesterday, and you don't want to get taken out on these intraday spikes. Every day I talked to multiple people today, and every little sell-off, they're like, should we go short or we're taking out the lows yet? I'm like, the probabilities aren't there. But it sold off a bit. The probabilities aren't there. Everybody on any sell move already wants to sell the damn thing. But when it can just be volatility on a choppy friggin' day. You gotta learn to manage probabilities instead of trying to capture every little micro move unless you're trading off a friggin' 5-minute chart. And then stop worrying about your every little. Then you shouldn't be trading off a weekly pattern either. All right. Oh, Rich, Ray Dalio bought some Docu shares. Feds Evans, optimistic we will be able to avoid a recession. That's what they're gonna. We've already talked about this before. You think they're going to come out and say, hey, we're going to drive things into a recession?
Hold on. Optimistically, we'll be able to avoid a recession. Hey, optimistically, I'll never die of anything. I'm going to die, but optimistically speaking, I hope I never do. That's a dumb statement. Not by you this time, Coco. Most of the time it is, but this time it was a dumb statement by Bullard, because to say optimistically we can avoid a recession, of course, optimistically you can avoid a recession.
Optimistically, inflation would disappear to 2% tomorrow.
There's clouds and there's lightning. I left without my umbrella. Optimistically, it doesn't rain. Oh, I'm sorry, it was Evans. Oh, Charles Evans is Chicago Fed. I've talked to him multiple times. He's the most dovish guy out there. He's like this just super sweet, calm, nice guy. It's just like, do you think there'll be a recession? I just want everyone happy. That's kind of how Charles Evans is. I like him. He's a nice guy. It's a really nice guy.
Thank you, Ted Tractor Beam. Thank you. Oh, that was something you missed while you were gone. I hope everything's okay. Bob, do you think natural gas and crude oil bearish when the EU capped the oil for tomorrow meeting?
It will have virtually no effect because the cap literally just means they pay the oil companies. It's the same, or the energy companies. It's not a price cap, it's a consumer payment cap. They can't, you can't cap prices in a market. So you're basically telling a gas company that they buy it at 600 euros, but the cap is 500 euros, that they can only sell it for 500 euros. Well, they're just not going to buy it. The cap, the way that it actually physically will function, is that the government makes up the difference. So no, it's not going to affect free market prices of the type that we look at in these webinars. So no.
Oh,
In some
George.
cases, it can have those kinds of things, if they're not done right, can have the effect of raising prices by shrinking supply. If there's an actual physical cap where they say you can't sell it at this price, then it long term keeps prices up because the companies just won't do business until it falls into the area where they can make profits. And then they'll do a ton of business to try and make up the profits they lost at the higher rates.
Hey, George is back. Thunder and lightning. By the way, you're lightning, Bob. Bob, I am thunder.
Ah, gotcha.
And
I like being
George put the comment. You can reiterate it in here, and I'll put it up on the screen, George. Your comment from the stream yesterday. Coco now asked Bob, "What's the real cause of inflation?"
Well, there's multiple causes of this particular bout of inflation, but I'll just quote Milton Friedman. It has always been and will always be a monetary phenomenon. When there's too much money chasing too few goods, regardless of whether it's on the supply side or the demand side, that's the cause of inflation. So the best way to look at it, Coco, is if there's 10 people and they each have a dollar, okay, and there's 10 oranges, each orange costs a dollar, okay? But now all those 10 people have a bunch of kids and they want more oranges. So the government gives them more money and they decide to pay $2, and one of the families wants two oranges. Well, then that only leaves 8 oranges for the remaining 9 families. So the price goes up. Price goes up to $2. The problem, in reference to John's question about energy, John A's question, in this particular case, energy is the two apples, okay? And the two apples cost $500 each. And now the government says, well, you can't charge $500. You got to charge $400. Well, there's still only two apples. Like, they're not making more apples to bring the price down. They're not growing apples. They're just saying you can't charge that much. There's still only two apples. So no one's going to buy the apple for 500 and sell it for 400. So they just don't get sold. Now there's zero apples.
It's all apples and oranges to me, Bob.
I almost set you up for it.
Daniel feels like China's entered the woke anti-production environment of the U.S. and EU. Any guess on infrastructure in Indonesia or Africa is moving to fill the gap?
Well, China just said they're doing another 40, what was it, 44 billion or 4 billion? I think it was 44 billion in infrastructure spending. They just passed that stimulus. So the interesting thing about that is what they're doing right now is they're tearing down the ghost cities. In case anybody didn't, yeah, it's 44 billion US dollars in stimulus, and it is 100% to infrastructure, which is all they've been doing with stimulus for the last 2 decades is infrastructure. So that's part of the reason copper jumped over 3% today, along with a lot of the industrial metals, is that announcement. What's infrastructure? Infrastructure is buildings and bridges and roads. And God, I hate roads and bridges. When I hear politicians say roads and bridges, it drives me nuts. But anyway, in China, it's tearing down ghost cities and then rebuilding them under the excuse of we need to build them better to attract people to them. So I don't know about North African stuff. I haven't followed any of that. If there's a reason to, I will. Indonesia moving to fill the gap. Daniel, I don't know. I haven't followed either one of those economies because I don't trade anything directly related to them. But um, the anti-production movement was kind of spun on its head in China by the stimulus bill that they talked about, the stimulus that they announced today. I'm not sure if that's what you were asking, but
See, here's the explanation for thunder and lightning. Mike is thunder, Bob is lightning. You always hear thunder, but you only see lightning once in a while.
I like it.
Actually, when he said that, it made sense.
I'm going to send you this video, Mike, on a personal level. Last night I went outside and it was constant lightning. It was constant Bob here in Florida. Like it was nonstop. It
It's
wasn't it
constant.
wasn't like a bolt and then it stopped and then 10 minutes later another bolt and I just sent it to you. It was literally constant. I've never seen a lightning storm, but I'm guessing that's what that was.
Have neat. Bob, is there a way to estimate the effect of quantitative tightening on equities? Will the top 10 S&P get hurt the most or nothing like that?
So I can't give you the stocks individually that will get hurt the most, but I will tell you that value stocks will get hit the least. When you have interest rates going higher like this, the companies with money theoretically get hit the least because they don't go to the public markets as much as the companies who don't need the money. Now, again, I think I mentioned this the other day that while the Fed was actually able to roll over 35 billion in QT over the last few months, I think they started that in June, they were only doing on average about 16 or 17 billion. So if they actually go to the 95 billion that they say they're allowed to now in September, I haven't looked at it yet. I'll probably look at it mid next week to see what they've been doing. That's a 5 or 6 fold increase. So that's part of the reason that the move in rates higher is going to be very hard to pivot. Very hard to pivot. I mean, if they're dumping 95 trillion in treasuries, even if they roll off, okay, the spending of the government is what it is. So they still need to issue the same amount of bonds. So those bonds that roll off, what happened before is the Fed would take the proceeds and reinvest them. They're not doing that now. So the issuances, the size of the issuance by the government won't change. You need new buyers for that. Okay. Somebody has to come in and buy these things. So those entities are likely to demand higher yields than the Federal Reserve was demanding, and we're already seeing that. So,
Coco. So high gas prices are not the cause. So if we get a recession and gas prices goes down, inflation will follow. So why a recession is bad for stock market?
okay, a couple of things, Coco. That's a legitimate question. I never said recession was bad for stock markets. Also, neither did Mike. Okay? Neither one of us have ever said that. As a matter of fact, I don't know if it was last week or the week before, 46%, it's like 46.4% of the time during a recession, stocks move higher. 84.6% of the time, they're up a year after the recession ends. Okay. The times that that doesn't work is when inflation is present. Okay. So it's inflation. And I've said this multiple times. I could care less if we're in a recession or not. I care more about stagflation. And a recession in this particular circumstance would be part of the stagflation narrative. So that's number one. Number two, high gas prices. Just think of what I said. Too much money chasing too few goods. Okay. High gas prices is caused by what? Less available fuel, too few goods. Okay. High gas prices is less available fuel. That's too few goods. Too much money chasing too few goods. High gas prices is a part of inflation, not a cause of it. Now, does it bleed down into other things causing those prices to go up as well? Yes, that's the production process. That's PPI, that's running a business. But when gas prices have been going higher because of the perception of not enough fuel. And in Europe, if you're talking about natural gas and heating oil, it's not perception, it's reality. It's two apples. So those are very legitimate comments. Okay. The part you're wrong on, you're always wrong on one or two things, Coco. I love you, but you're always wrong on one or two things. Is that Mike or I ever said recessions were bad for the stock market? We never said that.
Also, based off a lot of research, when you're tipping into a recession, in the first little bit of a recession, it is generally negative for equities. However, that's also because you get earnings compression. Companies have to batten down the hatches going into recessions. But that, because things overshoot and earnings get compressed, you generally, and the markets are forward looking. So before the recession is over, you generally start rallying the markets out of the recession. Okay? Keep that in mind too. So it depends what point you're at going into a recession. Yes. Like now we have yet to have major earnings compression. If we tip into the recession as expected and we start getting major earnings compression, you will most likely get stocks hit harder. And then as we get to the bottom, we might still be in a recession in parts of 2023. The market can rally. Remember, with the yield curve, as you start accelerating back above zero, that market generally gets hit the hardest. And then as you get to a point where economic growth is starting to kick in, you can still be in a recession, the market starts turning, and that's where you get the wonderful bottoming moves while you're still in the recession. That's my 2 cents. Daniel says, thanks, Bob. George says, give like for the Path Trading Partners. Hello, Mike and Bob. We are in the middle of a recession. I don't know if we're in the middle yet. I don't think we are in the middle yet.
Yeah, I mean, we could be, right?
I think we're more, if we
could
are,
be, but
we're more at the
go ahead,
beginning.
Mike. Look at it this way: if we are, we won't know till we're out of it. The NBER has never announced a recession until it's over. They've never officially confirmed one until it's over. So you might be right, and you will either be proven right or wrong, Doctor. You'll be proven right or wrong in theory, right? I mean, we all talk about how they change the definition of everything. I'm not one that focuses on whether or not they change the definition of a recession or not. I don't really care. But from that perspective, we'll know soon enough that people are saying, by the way, you're on the same page as Jim Bianco. Jim Bianco thinks we're in a recession right now. So you guys would be proven correct or incorrect when the recession is over, if we're in it.
Well, and I think it's just when they announced the timing, when they announced the official start of is.
Hey, Coco, I'm sorry. I'm going to have to go soon, but I want to touch on. He put two things in there. One was how can U.S. escape stagflation by taming inflation. Okay, so by what the Fed is theoretically doing, it may cause a recession, but it will help potentially, not for sure, to control inflation. But if you go over what the ECB just said, they don't expect to be back near their target till 2024. So it's going to be very difficult to avoid. And then the second part, Coco, is Japan has not been in stagflation for ages. They have no inflation. They've been in recession for ages. They've been I shouldn't say recession. They've been in stagnant economic growth. But stagnant economic growth is not stagflation. It has to be tied to inflation. And Japan has had sub-1 inflation, sub-2 inflation for decade after decade after decade. So they're not stuck in stagflation, buddy.
Yeah, they have. I was going to say they have had more of a deflationary environment.
Yep.
I mean, that's been one of the things they're trying to get inflation. They wanted inflation. So, yeah, they've been in a growth crappy growth environment, but they did not have high inflation at
Yep.
all. That's why don't prices in Japan just go up?
Well, there's a number of reasons, and I mean, again, like that's a legitimate comment. Then, if I'm right that too much money chasing too few goods is the thing, right? Then there should be inflation in Japan, right? There's been several issues with Japan. Number one is there's been no lack of goods, none. I mean, they have too much money chasing way too much goods, so the prices haven't gone up. They're also not a very consumer based society, which is part of the reason that too much money does not chase too few goods. They have ample goods. They're a saving society. They're one of the highest percentage savers in the country. So the issue in Japan has been getting people to spend, which is why they were the first and the deepest to go into negative interest rates. So that if you went and put your money in the bank, you got less money back. They still did it. They still did it. So culturally, they've never had too much money. I shouldn't say never for short periods of time, but for most of their economic problem over the last 3 decades, they've had too much money chasing way too many goods and going into way too many savings accounts, basically.
If Powell goes 50 instead of 75, do you see markets going bullish for the rest of the year?
I wouldn't say the rest of the year, but I would say you get a pretty significant rally. And I'll be involved in that. I don't mind buying that dip. Well, I won't be buying the dip. I'll be buying it on the way up. I don't buy dips. I don't believe Mike does either, other than maybe a double, if you want to call it double a dip.
Or a percent B reversal. That's technically
Percent be
a
reversal.
pullback.
Yeah.
But again, I hate these names for things. It's trying to
I know. So do I,
categorize
dude.
everything because you know what? If you have a double bottom in a down market, is that versus a double bottom still when your overall trend is up, which can happen
Yeah.
also? There-
Yeah.
what is one buying the dip, the other one isn't? What is it? We're just too caught up with definitions. Daniel with the super chat. Thank you very much, Daniel. Dr. M acknowledging it. Thank you, Dr. M. Again, everybody, thank you, Daniel. And Dr. M also, when you were before you even said it, Dr. M was talking that Japan very high savings rate versus USA and a lot of the rest of the world. I mean, they get some money. They put it in the bank.
Yeah.
Oh, I'm not even gonna. All right, Coco. No, the only dip that's delicious. I like a good French onion dip. I like a really good queso dip. Uh, we'll just leave it at that. All right, Bob. We'll let you go for now.
All right. Thank you, guys. I'm sorry. I'm just distracted by some personal stuff, but it's nothing bad, just so everybody knows.
Okay.
I
Well,
appreciate it.
we'll remember. Oh, next Tuesday when you're back on, we got CPI numbers.
I got to share. Yeah. CPI is big. I've got a webinar that I'm doing for, I think it's StoneX, a futures webinar. I'm honestly not sure what time that webinar is. Don't think it clashes with either the morning or the afternoon Tuesday session, although I'm not sure. Here's a nice gift somebody just put up on Twitter. You'll like this.
Oh yeah, I love that.
This is
All
Coco's
right.
prediction for October.
There we go.
All right, guys.
All right.
Cheers, everyone. Have a great weekend.
Hey everyone, I got to get through. I got to deal with a couple things too. Thanks everyone for being here. Again, let's just get through this. So, pullback levels. Let me erase some of these. Now we can get into overnight, what I'm watching. Pullback levels. 4,000 is key. If we drop below that, it's about 39.85. Next target to the upside, 4,024, then 4,031. The only thing, we're not yet at daily cycle tops. We're not yet overbought. The only thing that would cut this short early is on a close below today's low, if you want the percent B sell indicator, the early warning, if you want an early warning, would be a close below the 62.5 of this up move, which would be 39.31. Other than that, remember, you got Fed speaks tomorrow, but not a lot of other numbers coming out. And Monday is also. So the big thing is CPI on Tuesday. So we could still see some follow through, even up to returning to the 21 EMA, the 50 EMA, to kiss that goodbye in the 37.5% harmonic. So that's my next target above 40.31 is right around 40.50. And also remember, we have major OpEx this month, so we could easily then return to this 4,000 or even 3,900 going into that after CPI. NASDAQ, again, choppy to bullish. Put on the same stuff. Don't get faked out by these little moves. You got to trust the bigger patterns way more than littler patterns. If you want your early warning sign, 12,093 on a closing basis, and that would, even if you get a 1 hour close below there, that would be a very key warning sign. Other than that, the levels that I am using for overnight, 12,290 to 12,300 on pullback, and then 12,206. Sorry, I got to drop that a little down. Then 12,000. 250 to the upside, a retest of 12,385, then 12,435, then 12,500. Your closing, yes. If you got a close, besides that early warning sign, if you got the close below today's low, you get that roll over move confirmation based off of percent B sell. Cycles aren't yet at a daily top. So above 12,435, 12,005, as I just said, then major would be 12,617 to about 12,660. Same thing, return to the top of the rotation zone, kiss the 50 goodbye, retest the key emotional close from the 26th of August. There's lots of overhead resistance. Why? Because up in here, you start getting to all these people that were trapped since the beginning of August in the move that could look to unwind it. I don't need to go through a bunch of this. The levels for the Dow, 31,850, 31,950, then 32,105. Key support is this 31,680 area. Then major is about 31,523. Minor would be this 31,588 on the upside. Russell, you have a cluster at 1852, then 1869 is the next major resistance. Key support, minor support now coming in at 1832, more significant about 1825. Notes, I'm still watching with this rollover play. Again, spike into the rotation zone, rotation back down. I'm expecting yesterday's lows get taken out sometime in the next couple days, and then just return to 115.07 easily. I just want to see where the longer term harmonics go from this key high to this pausing bar. That takes us to a net intermediate would be 114.19 area. Dollar index, pretty much a doji day, working off, cycles coming to the bottom, working off overbought conditions, still holding on a closing basis above the rotation zone. Nothing yet doing there. VIX, talked about this morning, could not hold that 25.50 level. You can see it here. You can see it here. Coming down, there's that 25.50, and then boom, straight through it. That's what I was talking. In order for me to stay really bearish, we had to rotate up to get choppy bearish, and we did not hold it. Tomorrow, we're actually returning to the lows back from September 2nd. So if that doesn't get any support there, I'll be watching for a continued bullish move. Crude little bounce there, and then we had this little micro double. First, second targets hit. I'll just leave that on for overnight, but not much. Remember, I'm watching for the next rollover play in that. We'll take a look at some of this tomorrow morning. I didn't think it was that strange market close today. We're still going with that choppy, sloppy trend up. Can you look at this? Is pretty much it. Then I got to wrap it up. LTHM. Again, I'm going to give another shout out real quick to Daniel for supporting the channel. Thank you again, Daniel. Hope you're still here to hear that. If anybody else wants to, this is why we can keep it free. Supporters like Daniel. I sound like PBS. Supporters like Daniel help keep this free. And I do appreciate all the super chats because there are some decent costs to keep this going to multiple sites per month. We do not make money on this, by the way. Even with the super chats, we don't make money. I'm trying to get information out there. That's why we do this, to counteract the stupid. I'm tired of the stupid. All right, you're looking purchase some insurance. You are getting some divergences up here. You don't have a mate. Let's see if we got a minor. Let's see. 35, 35. Whew. Well, you do still have a potential double top in here. Even if that blows out tomorrow on any move up, it would probably blow out 29.85. If you start breaking below there, you have more of a topping pattern in. If you're trying to do it into this rally, if the market continues anywhere up around this, let me see where we sit longer term. I mean, you got a key close. This is pretty good. If you start breaking down below 33.50, I'd start looking to get, especially if the market starts rolling over, I'd be looking to get some hedges on there. On a continued rally tomorrow, if it continues tomorrow and Monday, as it gets up to this 36 to 36.50 area, I'd be looking to put on some hedges, and that's based off the reverse harmonics. Because anywhere you get up here, especially after a breakout move, you generally get a pausing, and if the market rolls over, you can get more of a waiting area. So that's where I'd, separate from that breakdown, that's where I'd be looking on a rally to put something up. You're welcome, Daniel. Again, thank you for the super chat. So that's where I'd be looking. I'd be looking to, especially if you get a decrease. I don't have the implied volatility with what's going on with LTHM, but on this, you should get a decrease in implied volatility going up into this level. So I'd be looking to get some cheaper hedges. Now, there are two ways you can hedge. If implied volatility is higher, then you could always sell a call or a call spread up here. If volatility is low, then I'd be looking to do something more so with a put or a put spread. That's where the volatility comes into play. I can't look that up right now. But because we still got a slight upside bias in the markets. Now this depends what you want to do, because this could continue. I'd have to do some more research into the fundamentals and how strong and their trajectory with everything. I mean, it looks like they're doing. I might be looking more so to do something on the call side unless volatility is super beaten down. Just because if we get a market rollover, you could see a pause in this, where then I'd like to collect some of the premium from the call side before it continues higher. You might not get a big collapse in this. Especially, you might get more of a pause to a minor pullback. So that's where that comes into play with hedging. All right, with that, we'll have to look at some more stuff tomorrow, possibly after the close. I got to deal with some things, and I'll be here for the open to fine tune our levels. Thank you for being here and tuning in. Again, thanks one more time to Daniel and everybody else who helped support the channel. And I will talk to everyone later. Have a great evening. Bye for now.